Thanks very much, everyone, and thanks for coming along. Thank you, RIU, for putting on this today, and also to Argonaut for sponsoring the first morning of the program, which I'm sure will be a enlightening couple of days for everybody. And looking at the program, there's a lot of very interesting and prospective companies to present. A lot of you probably don't know much about Triangle, but I'll give you a bit of a brief history. We haven't done a lot of promoting in the last 5 years. Triangle was originally, going back in 2008, Maverick Energy, listed on the ASX. The Triangle original asset was a PSC in Aceh, Indonesia, that was backdoored into Maverick Energy. For a number of years we operated in Indonesia, in Aceh, which was difficult given in the previous 10 years Aceh and the central government of Indonesia were at loggerheads together, and we had a hard time. We had a great asset, and if it was in anywhere else in the world, I'm sure it would be worth a lot of money. But we encountered some difficulties with hold-ups and the system in Indonesia. But to cut a long story short, we, after a lot of hard work, Rob Towner and myself got involved on the board just over 3 years ago, and we managed to monetise the asset in Indonesia, which completed at the beginning of last year. With those funds, we're able to buy into a wonderful asset, which is the Cliff Head oil field located in offshore Dongra, right here in Western Australia, only 350 kilometres north of Perth. Sorry, I just have to drive this thing. Green. So here we are today. Sorry about that. So Triangle, we lost my train of thought. We acquired this asset early last year. Where it's left us is to provide us with strong, predictable gas flows in a production asset right here in WA in a stable jurisdiction. We've got a majority 78% share of the asset, with Royal Energy having 21.25. Year to date, we've averaged 1,200 barrels of oil per day, which basically is produced through our offshore unmanned platform and piped onshore to the HEAD-ARROWSMITH plant in Dongra, and then trucked down to the BP refinery in Kwinana. We also have an interest in the highly prospective Xanadu drill, which is currently underway in joint venture with Norwest Energy, who are halfway through a 23-day drilling program, with the pay zone in the drill program expected to be reached later this week. In the Cliff Head field, we have opportunities to enhance value by EOR activities, as well as some very well progressed infield and near-field resources that we've been studying and looking to implement some activities in the next 12 to 18 months. So we've got a clear strategy in place with some diversification across some different assets and some different opportunities. And most importantly, as we see it, is we believe we're significantly undervalued in comparison to our peers. So in the last 12 to 18 months, since we've divested out of Indonesia, we really haven't done much promotion until recently. We've cleaned up our structure. We did have over 3 billion shares on issue, which we consolidated. We also conducted a share sweep to buy back the unmarketable parcels to bring us back to 167 million shares. In the last 8 months, our market cap has increased from $3.5 million to yesterday, $22 million. And as I said before, we've got strong, consistent cash flows because we're producing 1,200 barrels a day, of which 78.75% is attributable to us. So we've really, we believe, turned this company around into an exciting situation with a lot of opportunity ahead. There's 2.7 million barrels of 2P reserves remaining in our reservoir, and as I mentioned before, we've got various strategies to enhance the recovery of that. So the Cliffhead oil field is located 290 kilometres north of Perth. The offshore platform, which I don't know if you can see, is 10 kilometres out from the onshore HEAD-ARROWSMITH plant, and we pipe the crude to the HEAD-ARROWSMITH plant stabilisation facility, where we then truck to down to BP. The field end of life is around 2025, so we've got a fair bit of time left to go, and we're looking to extend that. In the last 12 months, we've worked very hard with Rock Oil, who were our JV partner, and implemented a lot of cost savings. We've renegotiated a lot of contracts, including helicopter, boat, trucking, fuel gas for the plant, and other contractors. And round two's to come. So we're continuing to look for further savings in our operations. Production started in May 2006, and over 15 million barrels of oil have been produced from the field. It's the only, the ARROWSMITH onshore facility is the only operational processing facility in the Perth Basin. It's an impressive facility. It cost $150 million to build. The offshore platform was another $175 odd million. So there's $327 odd million worth of infrastructure in the assets. So it's very valuable. The crude pumped to ARROWSMITH, ARROWSMITH can take up to 15,000 barrels of oil a day, and currently very underutilised at only 1,200 barrels a day. So it's got, and this is important for later in the presentation, it's got a lot of capacity in that plant to handle third-party crude from other operators or other producers in the area. Produced water is injected back into the reservoir and pumped back in to enhance the recovery of the oil. So in a nutshell, we see this infrastructure as very valuable to the region. It will take a lot of time, effort, permits, and applications to get something like this built in Dongra, a little fishing village, crayfish village, not far north of Perth. So in relation to exploration upside, the enhanced oil recovery EOR studies that we've done, without me being technical, being on the CFO and financial side, what we're looking at is a process to reduce the interfacial tension between the oil and the water, What that does is allow that to loosen up and to rise to the top of the reservoir and basically increase production. Additionally, the Mentel and the West High prospects have had work done on them already, and we're continuing studies and technical work in relation to those. As I mentioned earlier, we're in the middle of a program with Norwest Energy, who are doing a great job drilling the Xanadu well, which is located TP15. It's only 14 kilometres south of our ARROWSMITH processing facility, and it is a onshore drill to an offshore target. It's only 800 metres deep and 1.3 kilometres out to sea. Importantly, it's a 160 million barrel prospect, which is, if we go back to the size of Cliff Head, which was 16, it's 10 times potentially the size of Cliff Head. And Cliff Head's been producing for 10 years, over 10 years, and still producing. The well spud on the 4th of September for a 23-day program, and expected to conclude around about the 27th of September. However, watch the news flow for Norwest, because it will be hitting the pay zone sooner rather than the last day of the program. It's a conventional oil play with 3 intervals to be tested. So the unrisked best estimate of the resource is 160 million barrels of oil. The estimated cost of the drill is $7.5 million, of which Triangle funds 40% to earn 30% of the drill. So it ticks a lot of boxes, and we're very excited to have that going on at the moment, especially whilst this conference is underway. This just gives you a visual indication of the size of Xanadu compared to Cliff Head. Xanadu on the right, in a 5-kilometre section, is a massive target, and it's been sitting there waiting to be drilled for a while. The last 2 or 3 years of energy environment have really restricted the capacity for Norwest to be able to move that forward. And this just gives you an idea of where it is in comparison to our offshore Cliff Head oil field and platform, to our ARROWSMITH facility, and to where Xanadu is down here. So on success of this, an onshore pipe would go to the ARROWSMITH facility, which has the capacity in a short time frame to get to production, and as I said, $150 million of infrastructure sitting there waiting, ready to be utilised. One of the other diversification, I guess, activities we've got on is REIDS Dome, which is PL231, located in Queensland. This asset was a legacy asset sitting in Maverick Energy when Triangle was backdoored into it in 2009. We've been carrying it for nil value on our balance sheet. We originally had a 20% participating interest in the joint venture, with Senex as the operator with 40, and Dome Petroleum in the UK with 40. We were able to deal with Senex, who were a great company to deal with in this sort of activity of acquisition of one of their projects. We obtained operatorship and their 40% for nil value, for nothing, apart from doing a fair bit of work with the Queensland Department to get it done. Triangle it's a conventional gas appraisal target in Queensland in the Denison Trough in the Bowen Basin. It's non-core to what Triangle has been doing, where we've publicly stated that we're pushing the Perth Basin, but given the Queensland environment and the lack and shortage of gas, we've been able, through Orbit Capital in Queensland, to spin this out of Triangle, and it's due to IPO on the ASX in mid-October. In a nutshell, Triangle will have a 35.47% interest in the IPO. It's a $27 million IPO to raise $5.25 million. And on a successful IPO, that'll be worth, in book value, $9.5 million to Triangle. It's got 2 deep and 11 shallow wells already drilled in its history. The shallow sands that have been tested with flow rates up to 2.8 million cubic feet a day, with oil and gas shows present while drilling the deeper REIDS dome beds. So we just saw it as an ideal time with Queensland Gas the way it is to really in some way divest this asset but keep the majority stake of 35% in the IPO. We've worked very hard this year to do it, and Orbit Capital have done a great job. The shares will list on a successful IPO at 20 cents a share, and there is a link to the State Gas website that prospectus can be downloaded if anyone's interested in having a look at that. And just to add, current Triangle investors will get a priority offer on the IPO up to $1 million. The primary and secondary targets in State Gas or REIDS Dome are the shallow Cattle Creek formation of conventional gas. It's as shallow as 130 metres, which makes it very economic for us and cheap for State Gas to develop. Stage 2 would be and concurrently is to develop a pipeline and a market to gas to the consumers in Queensland. And from there, it would be to test the deeper REIDS Dome beds where the bigger pay is, potentially, where it's believed to have a 2.7 kilometre thick pay zone. It's encouraging, and we're looking forward to this process, and so keep your eye on State Gas. We've able to obtain a quality board with Tony Bellis and Ian Payton and Greg Baton and Rob Towner. Rob will represent Triangle. Tony Bellis is formerly involved with CS Energy, one of the major energy distribution companies in Queensland. Ergon Energy is the distribution business. Ian Payton is a very highly qualified geophysicist and petroleum engineer, formerly of Santos, Conoco, etc. So they're a strong team that we've been able to get onto that board. So getting to a conclusion, the key catalysts that we see with Triangle, as I've just gone through, us in the last 12 months, we've been able to reduce our operating costs in Cliff Head from $44 a barrel down to $29.5 for the last 6 months, till 30 June, 1st of January till 30 June. We've got immediate targets, we've got studies for EOR on the go, prospects, we've got Xanadu drill going on at the moment, and interest in an upcoming IPO which adds immediate value on success, leverage to oil gas markets and also the Australian gas, Eastern States gas market. We've developed some strategic partnerships in TAMARIND Energy, who are our technical support people based in Malaysia. Michael Arnett, former chairman of New Guinea Energy, Ian Angel, formerly associated with Talisman. They've been very supportive, and we regularly stay in contact with them. Norwest, as I said, with the drill, and State Gas on the IPO. There's just a snapshot of Ted, Rob and myself as directors of the company, which you can peruse later. But in summary, I'll leave you with that to just have a read through. And we invite you to give us a call, come and see us outside. We believe we're significantly undervalued compared to our peers. We've got a substantial infrastructure of $320 odd million. And we're very excited with the coming months and years for the company. And thank you for having me.